Thank you so much for joining us, Mr. Manghnani. What do you think is happening right now on the Nifty? Let's start with the Nifty.
Yeah, I think you're clearly in a what we call a complete bullish phase, complete breakout phase that obviously started somewhere in March, but really took off post 7,800, 8,000 range. So once you broke out of that initial major resistance, you've been on a one-way move where clearly mid-caps, small caps, all have majorly outperformed. So your initial move from 6,800 to 7,800 or so was more large cap driven, but the last 800 odd points has been definitely more mid cap and small cap, and they are reflective in the sense they are live highs, whereas the Nifty still has to go to 91.19. It's tough to put a number on the Nifty when, especially in this kind of breakout move. But I think 8,800, 8,830 is the last clear resistance before you start looking at the all-time high of 9119. So we are hardly, 30 points if you take 8,800 or 60 points if you take 8,830. So in the last resistance zone, where if the market were to take out, then probably you have nothing left before 9119, at least on a technical front.
All right, so you're essentially saying that except for that 8820, 8830 kind of space, after that, once we cross that, then the next one goes all the way to the all-time high, right? 91.19.
Yeah, we've taken out pretty much everything. Even this 8830 is actually, last year when we were falling for about 11 months, we made a downward channel. That channel width is about 970 odd points. And we broke out at about 7840, 7850. So if you add 970 points to that, you get roughly around 8820, 8830. So that's where I'm working on. Otherwise, if you look at Fibonacci numbers, we have crossed 0.5, 0.618, 0.76. All those have already been eclipsed. So this is just the last sort of channel calculation that I have done. That post 8830, you really don't have anything in sight till 91.19.
Right. So if I look at the other thing, the bank Nifty, how are you watching that?
Again, there I pretty much think it's still dominated by large caps. I mean the private names, sorry. I still feel there's a lot more to be done as far as PSU catch-up is there. See, to do reach a phase when people start talking about valuation or people who have missed out on the market then start buying stocks that have not moved. So even today, State Bank at about 250 odd, the high was somewhere around 330. Or a PNB at 120, the high used to be 200 or 300, or a Bank Baroda high used to be 250, it was still at 160. So people will start lapping up those stocks. So even an ICICI, which is in the 250s, high used to be, I think, 350 or 390. So at some point, there will be one side of the market that has not participated, which would try and buy those stocks, which would definitely help the Bank Nifty. But for now, as far as the big fund buying is going or FI, you clearly see it's the Yes Banks, the HDFCs, they continue to make, in the sense, they continue to make new life highs. So market is still chasing strength. No wonder you're seeing private banks lead in the Nifty along with the other two sectors which are big, obviously, which is auto and cement. But these 6 sectors continue to lead. And what has remained a laggard still stays a laggard. So I think an IT or a pharma is still lagging behind. So there's clearly rotation going on. It's very clear what's at a 52-week high is still being lapped up by the funds, and that may continue for some time.
So, if one viewers looking at the auto index, right? How liquid is that? Is it even worth looking at, or is it just a number?
I'm not talking about the index itself. I'm saying if you look at the names in the auto stock. So a Tata Motor, okay, it's not 600 odd, which was the high, but if you see from 260 or 270 in February, the stock is doubled now almost. So for a large cap stock to double in 5 months is quite rare. So I think you look at a Tata Motor, you look at an Eicher Motor, which is at a life high. So there are enough stocks in the Bajaj Auto, Hero Motors, they're all doing very well, which tells you that the auto pack will lead, and with the good monsoon, that is one sector that tends to benefit first.
So you would say that they have already achieved what they could have, or you think that, technically...
No, I think you're in a market which is traditionally in a bull market, stocks at new highs continue to make new highs, and that's what you're witnessing. So you will get the odd day when the laggards move because people don't want to buy, or people who have missed out who come to buy laggards. But the guys who are buying strength will continue to buy strength.
What, if any, will be the indicator to watch out for, which would indicate that there will be a turnaround?
The way it's moving, it has to be something completely out of the ordinary, because it's nothing to do with global central banks. I think people have stopped listening to them because it's all talk and no show. Nobody has got the guts, you and I know, to raise rates. Yes, the US has been talking about it since December when they raised the quarter. But after that, nothing is happening. Whether it comes in September or it comes in December, who knows? But every time the Fed meets, the market changes the expectation to the next meet. So, I mean, it seems like the ECB still in a cutting mode, with the UK central bank just having cut after 7 years. The Aussie, Kiwi, everybody seems to be on cutting rates. So it's very unlikely that the Fed is going to stick their neck out and go ahead. Maybe 0.25% here and there, fair enough. But it doesn't seem we are in a regime globally for a rate hike. So if this market, like your question is, had to correct, it would have to be something completely out of the ordinary that nobody is expecting. And that, I think, has to come globally. I doubt it will be a domestic-led event. It is going to be something weird that comes out if it brings about a fall. Because it's interesting if you read what's happening overseas. Even the so-called big-time pundits, that George Soros is, I know I hate to take names, but it seems like everybody is on the negative side calling for a correction.
Right.
And the correction doesn't come. So it just tells you that if it comes, it's going to be something completely out of the ordinary that nobody is expecting. Because otherwise, by now, it should have come, because everybody is on the negative side and giving you enough reasons for why you should be negative. But I think we are in a liquidity case where there's so much money on the sidelines, and if you're getting negative rates of interest, you got nothing else to do. So bonds continue to rally globally and stocks continue to rally.
So, for the past few days, when one was looking at, let's say, the technical charts of the Nifty, the candlestick pattern, then I was asking all our experts who were coming in that is there any indication that there's going to be a breakout on the upside? And some of those indicators seem to suggest that the bears were kind of losing steam, but almost everyone was very cautious, and they said that no, the downside risk is higher than expecting a breakout on the upside. So sentiment seems to be of analysts, of people who talk, at least people who come out in public and talk, what they're talking seems to be exactly the opposite of what they're doing.
I mean, I think it's unfair to make see, everybody has a right to an opinion. I'm sure at 6,800 in February, everybody was looking at 5,500 or 6,000 or whatever. And at 7,500 or 8,000 plus, you'd be looking at 9,000. I mean, that's the market.
No, what I'm saying is that the market, for the first time, we are seeing that there is a clear up move, or at least technically it looks like that. But most of the analysts are much more circumspect right now. They're much more careful before saying that, yes, this market is going to go up. We've had many more voices who are saying that, watch out, there's going to be a correction, even on our channel. That's what I'm trying to say.
Up. I mean, that's typical. When everybody is bearish, the market tends to move higher, or everybody is bullish, the market tends to be. So, I mean, you're in that in between, some caution, some, which is good for the market. I think if everybody got on one side of the coin, which happened in let's say February, where everybody was negative, that helps the market. So right now it's good to have some sort of skepticism, because that keeps the market going. If you have complete optimism and everybody bullish, then at some point it is going to fall, just on the lack of the fact there are no sellers. I mean, there's no short coverers in the market at some point. But right now there are still people shorting the market, which every time helps, because every time the market goes up, they have to come to cut, which further takes up the market. So I think it's good to have some skepticism. But, you can't blame somebody after 6,800 to 8,800, 2,000 point move. There is going to be somebody on the sidelines who thinks that, okay, this is a little too much, which is fair enough. And I think it's good to have a little bit of fear. Otherwise, like I said, too much optimism can cause big falls. So we don't want that kind of market.
So are you saying that there are still people who are taking short positions, have short positions, and if there is a further up move, as you were pointing out, that there seems to be nothing to stop?
I think the last move from 85.50 in the last 3 days to 87, today almost 8800, is a sign that there were people short, and there were people saying that market needs to come down, and that's the reason you're getting this next move up. But look, at every 52-week high, there will be some sort of skepticism, which is, like I said, good for the market. For me personally, I'm just looking at 88.30 as the last major resistance. And I think, to be fair and without sounding cliche, I think this is a market more of stocks rather than the index. Because if you look for the month itself, this index, except if you take out yesterday and today's move, this index was flat for the whole month. It's only in the last 2 days of the month we are seeing. I mean, as of yesterday, the market was up 105 points for the whole month. And yesterday itself, it's gone up over 100 points. That means we were actually flat for the month.
Yeah.
But in the same month, if you look what is the mid-cap index was doing or what stocks were doing, was completely different. So it clearly tells you that this is a market where stocks are performing, especially in the mid-cap and small-cap. And probably you need to move your focus from the index and not worry about will the index go to 9,000 or 9,100 or whatever number, but try to make money through the cash market, the stock side of it rather than the future side of it.
All right, this is, as we had been asking as well, that part of the reason that the Nifty was not moving, whereas the mid-cap, small-cap space was moving, is because a lot of Nifty heavyweights or even Sensex heavyweights are actually IT companies. Now, have you been tracking Infosys at all? Because that's one counter which a lot of...
Infosys, I think, broke down clearly the day the numbers came out on 15th of July. So post that, every time it's tried to bounce, it has fallen. Ideally, I think the stock is in a downtrend. Maybe you'll get these small up moves, but eventually I think it's headed lower. I'll give you a couple of reasons for that. One is the 50-day moving average is now broken below the 200 a few days back, but it's still there. So that will keep the upside limited. Every time it bounces, you'll get enough supply. The 20-week is trading below the 50-week. The 10-week is below the 20-week. So all these alignments are negative. So I think eventually this is headed closer to the 200-week average, which is around the 960 or 950 odd is also the 50-month exponential. So I think somewhere around 950, 960 is where I think Infosys will eventually head. It has broken down some clear trend lines, clear channels. So I think there will be subdued. But, there's so much rotation going on that even falls in these sectors. For example, I mean, a laggard like Reliance, like I mentioned yesterday, Reliance was doing nothing for so many months. Suddenly, you got a 50-point move in Reliance. So that offsets a lot of the negativity in the IT sector also.
Right. In fact, at around 965, 960, Infosys seems to have significant amount of support. So that is precisely why I wanted to ask you that question. All right. Thank you so much, Anil Manghnani, for taking out time for us.